With harvest complete for most farmers and crop insurance drawing to an end, some farmers might find themselves with unsold bushels in the bin. Brooks York with AgriSompo joins us now with some guidance on navigating this situation, and we sure appreciate your time, Brooks. So let's talk about this. Does crop insurance offer any type of protection from this point forward on a crop that's already been harvested?
You know, Jennifer, for the most part, we're looking ahead to 2026 and already kind of calculating those decisions. The good news is after this harvest pricing period in October, prices have up, and so this is a great opportunity right now. A lot of people, especially on soybeans, we're seeing all these historical indicators that are triggering a good time historically to make sales. If you've got bins, there's still a lot of carry in that bean market. And also with basis levels improving, futures improving, not a bad thing to take some of this opportunity we've been given since that October averaging period.
So your side gig there is that you host the Straight to the Point podcast. And recently you talked about base acreage adjustments that farmers will be eligible to make in the near future. Tell us about how these changes can affect farmers' crop insurance planning.
Yeah, they're indirectly related. And so they're in different titles in the Farm Bill. But with the passage of One Big Beautiful Bill Act, there were some changes made. So the base acres at the FSA office they don't have a direct impact on crop insurance, but essentially they impact the safety net programs like ARC and PLC. And with the changes in OBBBA, we can not double cover. That's not really the right word, but we can have supplemental coverage on ARC. And for the first time with an endorsement called SCO, or supplemental coverage option, which isn't a crop insurance title. So they're related, going to give us a lot of opportunities. What we want to do as farmers is as usual, this is going to probably come at the worst time to make these decisions. Maybe do your homework, get your 2019, 2023 planted and prevent plant acres handy. Also, contact your FSA office. Ask for that FSA 156EZ form. That's going to show your current FSNs and base acres, and just have your homework ready, because I think you're going to be able to complement that disaster net program, safety net program with crop insurance come March pretty well.
I hope everybody's taking notes, because you're giving some great information to us this morning. So Friday's WASDE report was the first one in quite a while due to the government shutdown. How would you say that has impacted the markets?
I think more than anything else, what it did is it gave confirmation of a good crop. Those yield estimates have come down a little bit from the midsummer estimates. I think maybe at one time corn was estimated at 189. We came in at 186. The bottom line is I think it gives us a baseline to say, listen, we don't know where this is going to come out at, but it's a good crop, both on corn and soybeans. It also means that the balance sheet is fairly stable. We've got a pretty good handle on domestic use on corn in the U.S. Exports are really strong. Ethanol looks to be pretty strong. With all those factors kind of becoming more known, it gives us more security to know that we do have an ample supply at the end. Soybeans, a little different animal. We've got exports right in question. And so a lot of things can happen there. So if we're seeing some volatility in the market over the next coming months, it's probably going to be in that soybean market. And we've really already seen that over the last 2 to 3 weeks.
All right, Brooks York with AgriSompo. We sure do appreciate you joining us this morning. Go have a great day.